South Africa registered its third consecutive trade surplus in May, this as June vehicle sales numbers surpassed market expectation. Let's unpack these and other stories from the week with Tsitsi Hatendi-Matika from Absa's Wealth and Investment Management. Let's start firstly with the petrol price. I think one of the biggest stories this week, the government already saying they won't cut the levies, and we're not going to see any petrol price cuts in the near future. South African consumers are already dealing with a lot 6 months into the year. How do we go around this on a day-to-day basis?
That's a very difficult question. I think the first thing that we need to keep in mind is we're potentially going to see more increases in fuel prices, given the weakness of the rand and the increase in oil prices. Day to day, I think people have to start cutting back on a lot. So consumers have to be think a lot more about their basket of goods.
And if we look at, government's plan going forward, we surely can't be adding too much taxes to the fuel price, as we've seen the results thereof. I mean, we're going to see an increase in fuel prices and also some businesses struggling because of the increase in the petrol price. Absolutely.
So for this year, the fuel taxes and levies come up to R5.34. And I'm sure government now knows that it's a bit of a tricky one to then increase it next year after the 52 cents that we had this year. And government did make a call today to say that retailers need to start thinking about how they pass through the increases, which is difficult. So it means retailers are probably going to be under pressure as they start to absorb those costs.
We saw the Absa PMI that came out this week, and that fell by 1.9 index points. The manufacturing industry also, the fourth contributor to GDP, one of the biggest sectors in the country, struggling still from last year. How are we going to see more productivity if we're seeing low business confidence from all the CEOs?
So it's a difficult one again, because if we look at the manufacturing PMIs this week, there were 3 indicators that came out. So there's the Absa PMI, which we look, as the research team at Absa, they look at the expectations index and the PMIs together. So the expectation index tells you 6 months forward what the different manufacturers are thinking. And that went down by 10 points. So that in collaboration with the Absa PMI also going down was not a good reflection. But then the Standard Bank PMI, which looks at manufacturers, construction and mining, went up by 0.9. So that went up to 50.9. So the two are giving us a different story. The one is more across the board. So it'll be interesting to see next week's manufacturing production numbers for May.
When we look at South Africa's trade surplus, it was a good one, relatively, at 3.5 billion, but it's still not a very impressive one. It's still very disappointing in terms of the country is importing more than it should be actually exporting products. What we saw there was that the agriculture sector is the one that's seeing products being exported. When are we going to see the likes of manufacturing, even though we're going through this tough time, decide to say, you know what, let's find other clients elsewhere so we can try to get the surplus up? Where is government's role in trying to make sure that happens?
I think this is also an interesting one to look at. When we looked at those numbers, we saw that the US, Germany and China are actually the top 3 on exports and imports for South Africa. And this is great with the Africa deal trade deal that was signed this week. So the government is already looking to other trade partners and trying to diversify out of the global markets. And that will make a difference.
How big an opportunity then, as you say, African countries coming on and trading with each other, if that is to happen and we get more trade from the likes of Egypt, Zimbabwe and the West African section and East African as well, are we going to see a strengthening of the rand should that happen for continental trade to improve?
The rand is always an interesting topic, but I think when you take away the rand, if you look at the trade numbers, Africa is a growing market. We've got the youngest population. If you look at demographics, this is where the young people are, and this is where the future is. So diversifying into the African market is fantastic for South Africa as a country. As for the rand, we've seen that the rand is very volatile and it always gets affected by global factors. So it's not only an SA story or an Africa story. The global markets will continue to affect the rand and how that performs.
We saw in Turkey that, the Turkish lira was a bit, hit by that election that happened in that country, which kind of favors the South African rand as a top emerging market currency. But we're still not taking advantage of that because of the trade war. Is there a way where South Africa can back itself in terms of, pushing forward the currency?
I think South Africa is trying to do a lot of the things that are positive, trying to make traction in terms of the policy that needs to be set. A lot of things seem to be going backwards because that policy is not going forward, but the talks are happening. And I think we've seen more in the last 6 months than we've seen in a decade. So there is definitely traction, and it's more positive than Turkey, as you said, which makes the rand more attractive and potentially South Africa.
And quickly, your growth forecast for the rest of the year?
So I think our research team had revised it. I'm not too sure where they are now. Previously, it was at 1.6. But given the softer data that we're seeing coming out of Q2, after manufacturing and mining next week, we'll definitely have a new forecast and see where we're going.
Well, South African consumers going to take more pain. That was Tsitsi Hatendi-Matika from Absa's Wealth and Investment Management.